The following pre-recorded program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike, Al, and Mark, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team, Mike, Al, and Mark.
And it is Saturday, and we're going to be talking about money, as we always do on Saturday. We're rolling, 2024 is rolling into the books and is history. And the question is, what did we learn from 2024? What did we learn? What was different? What went on in 2024? What were the lessons? That's going to be what we talk about today. And we're going to start. Al.
Yes.
Talk to us about one of your lessons that you learned from 2024.
The carry trade, Mike.
The carry trade.
Wasn't that a fun experience in August when we saw the market plunge 1,000 points in one day and everybody's like, what the heck is going on? Is this 1987 all over again?
I know.
I mean, nobody could explain it. Then it came out like a few days later that there was this, the Japanese yen in comparison to the dollar, with the interest rates were quite different. So people had been borrowing money because Japan has been basically in a deflationary recession for 30 years.
Yeah.
And the money that was borrowed was being invested in equities. And then the Japanese decided to move their benchmark interest rate just slightly. I don't think it was a quarter of a point. It wasn't like a half a quarter of a point. It was like an eighth of a point or something like that.
It was like an eighth of a point.
And it just threw them into a tizzy, and they had to start dumping assets to cover their losses.
Yeah,
and their lenders, their borrowers, right? Make sure their borrowers don't take their borrowers down with them.
You know, it's interesting because when something like that happens, I read a couple of our competitors' newsletters when they explained, and their response was, oh, the market has gotten a little overheated, and so investors are taking profits. Are investors rolling out of stocks?
Yeah.
You know, looking back on that, completely wrong. And one thing, even as that happened, and we looked at it on the 1st of August, looking at it, bond prices stayed the same. And usually if there's a sell-off in the market, bond prices go up because it's a flight to quality. They move from stocks to bonds. So even on that day, it was you could tell something wasn't quite right? It didn't look right.
But that's the thing, like the world, the big G7 countries are so organized in how they don't want a huge dislocation in interest rates because of the carry trade. And the carry trade is not something new. It's been going on since the 1800s when there was a lot more dislocation of interest rates because countries, we didn't have, by the time France decided to lower interest rates back in the 1800s, it took a long time for them to figure out in Japan what was going on or other countries. But now it's instantaneous. We know what's going on. And they try not to have that dislocation because of these reasons.
But, you know,
it's when you have the unexpected, right? The black swans of the world.
Yeah.
And when everyone in the know, in the Wall Street or in the big institutions are in that trade.
But we don't even know who the players were. They didn't disclose. Remember me and you sitting there saying, "Oh, we're waiting for who is going down,
who's going under."
Yeah, who's going under, or who is responsible for it, or who are the players? We don't even know. We still don't know who the players were.
And we don't know how much.
No, they said
was in the carry trade.
Between $500 billion and $4 trillion was the estimates.
Yeah.
Do we even know it's over?
That's pretty close on. 500 billion to 4 trillion?
Yeah. That's like, the point spread between, point spread is 7 points and 47 points, right? It's a little bit of little different.
But it's a significant thing because nobody really knew who's doing it, how much was being done. And as you said, Mark, that's the black swan that's out there. And you don't know
what other countries could be involved, right? And what other countries next? Who knows?
Yeah. And it all seems to happen on the end of the month or the first day of the month.
Yeah, but
because that's when interest payments are due.
Yeah, and the Nikkei, the Japanese equivalent to the New York Stock Exchange, dropped 12% in one day. It's worst day since 1987.
Yep, and that's when people were able to figure out what really went on.
Yeah.
It wasn't that the market was getting inflated. It wasn't all the explanations you heard on CNBC. It wasn't what our competitors were putting out.
It presented a heck of a buying opportunity.
Yeah. So big lesson from 2024 is that we don't know what the black swans are.
No, we have no idea what's out there.
No idea of what's going on.
And anybody who says they do, good luck to you.
Yeah. All we can do is prepare for them. And can't move my notes. There we go. Mark.
Yeah.
Lesson from 2024.
I got quite a few, but one of my favorites is that stocks do not last forever. Even in a gangbuster year for many stocks, it's been a great year for the indices and a lot of the big players in sectors. Some historically dominant players in those sectors have kind of were left for the dust. I want to talk about, while one may seem very overvalued and the other a deep value stock, they can actually continue a toward pace, and one be a bear trap and the other be a value trap, referring to the chip sector as a way. You got a lot of variance in there in returns.
So one thing we talk about every so often is Richard Foster's work at Yale, showing that the companies in the Standard & Poor's in 1920 had an average life of 70 years. Today it's 15 years or less. Mm-hmm. And you think about it. I bought a Palm, personal digital assistant they were called, not smartphones in those days, with a stylus and a thing you wrote on the screen. Palm was replaced by BlackBerry because BlackBerry had a keyboard.
So good.
And you could send emails. And of course, that was followed by Apple. Palm dominated for a while. And then BlackBerry
did. I missed that physical keyboard. Yeah. You could look around and text or email.
And the iPhone just crushed it.
So, the other thing is, when Microsoft came public, it took them 14 years to go from 0 to 1 billion. When Facebook and eBay came public, it took 7 years for them to go from 0 to 1 billion. When Zynga came public, it took 4 years to go from 0 to 1 billion. Zynga, of course, was the famous Facebook thing, the Farmville, was it?
Okay.
I don't know what you're talking about. You lost me, Mike.
And now we see...
it was a game.
And now we see a moment...
Facebook.
Oh, okay.
You could build your own farm.
Ah.
Okay.
John Deere sells 5,000 tractors a year.
Mm-hmm.
In the heyday of Zynga, Farmville, they sold 5,000 tractors a day. All
virtual.
All virtual.
Hey, doesn't help plow the fields, so does it?
Virtual fields.
On the virtual fields, it did.
Oh, yeah, it did a lot for the virtual fields.
And you could give animals away to people. I mean, I never got into the game.
And it's funny in context, it took Microsoft 14 years to achieve $1 billion market cap, right? Older companies took long decades, right?
Yeah.
And now we see $1 billion in market cap show up or disappear with a tweet. Or with a news, instantly.
Well, the other funny thing, see companies that are not going public, companies that are sitting on the side, it's growing a massive valuation that aren't going public. Like why is companies going public? We see there's a lot of them sitting on the sidelines that would have $50 or $75 billion valuations if they went public tomorrow.
Yeah,
and a lot of that's supply and demand and the private insiders.
Yeah,
right?
It seems like with where the markets are going, it'd be a good time for these companies to go public. The markets are really doing well. That these companies would benefit from going public, and yet they're not. It's kind of interesting, and I don't know why.
But I think it's interesting. There's a lot of companies that get going, like the Zyngas.
Yeah.
0 to $1 billion in revenues in 4 years, and then a drop off.
Right.
Mm-hmm. And they're developing all sorts of new games, Words with Friends and all those. But for a while, they were just skyrocketing. And then people got enough Farmville.
And in the world of cryptocurrency trading and 5-second TikToks to get your attention, that's part of the other side of that coin, right?
So for me, one of the things I learned, and maybe I can say I learned, inverted yield curves don't always result in a recession.
It's coming, Mike, though. It's coming. You wait and see.
Oh, yeah.
But recessions always are preceded by an inverted yield curve.
Yeah. I mean, just like Seattle's always going to get snow. You just don't know when, what year.
Yep.
No, it reminds me of the Paul Samuelson who wrote the largest selling economics textbook of the 60s or 70s. And his comment on the stock market, the stock market is always as correctly predicted 9 of the last 5 recessions. I mean, we live in a world which is dynamic, and things that have never happened before happen all the time. The inverted yield curve very often always in the past did precede a recession. Not this time.
What changed this time?
So
What changed, though? What was different this time?
what's different is you had 4 million more jobs than you had workers to fill.
Yeah.
And
yeah.
we talked about that.
Yeah, right.
Week after week after week.
I know.
We talked about
I
that.
I know.
And
We've never seen that before. We've had an economy, we had an inverted yield curve and still had the unemployment rate as low as it was. And people quitting jobs and taking jobs and getting paid more.
Yeah. I mean, we're seeing those kind of things happen. We're coming to a commercial break. Don't go away. We'll come back and maybe we'll talk about this inverted yield curve just a little more before we move on to another idea from Al.
About Money with your AFC team, Mike, Al, and Mark on AM 1300. The Answer. For more information, click on adamsfinancialconcepts.com.
All right, Mike, we're going to move away from the inverted. You and I have beat the inverted yield curve to death.
We've turned it upside down. Is that what you're saying?
Yes.
Reverted it.
It's reverting to the mean now. Let's talk about AI, though. I mean, I've seen all these companies in the 2024. They're just these small companies with no revenue, just skyrocketing. Anything with AI, kind of like with the .coms. Anything with .com is put a name on it, and the stock is going up 30% a day.
I have to do a tangent.
Let's hear it.
So when I looked at the outline,
Yeah.
you have down here AI.
Looks
I
like
read that as
Al. Yeah, I'm going to talk about myself for about 10 minutes here. What do they call it? It's just called the shameless self-promotion right now for me.
Okay, enough of that. Enough of my crazy ideas.
That's all right.
Back
That's all
to
right.
AI. Talk about AI.
I was just saying, I'm just looking at these companies that are just, one of them does voiceover, like voiceover IP and using AI, and the stock is like gone up triple. And I'm like, what's so revolutionary about that? I don't get it. I mean, I understand the application of AI and how instrumental it can be, but I just don't get that, like a company that says they're going to do that. And another company that Mark and I have talked about, before, they say they're AI, but a lot of them could be just data aggregators putting AI next to their name, and the stock goes up triple. And I had some inside information on one of them where the guy said, no, one person really liked this company, and they do a lot of government stuff, and one person really liked it, and they bought into it.
And that'll be the real fallout from any type of inflated bubble, right? Which you could argue anything with AI right now is going to the moon, as they say, right? And when we discover what's real AI, right? What is the real AI?
We don't even know how do they monetize.
And what
we
is
don't know how
just
they
the
monetize
data aggregation, right?
Besides ChatGPT and the $20 subscription, how is anybody else going to monetize? I don't know.
But it will be monetized.
It will. I don't disagree, Mike. I'm not poo-pooing the application, and I don't know that much about it. But I'm just saying, as far as companies throwing it out there that they're AI and they don't really have an application to monetize anything, they have no profits from it.
It reminds me of the .coms. And I can remember there was a machine shop that came public, and they got 3 times the value because they put their name, .com.
Yeah.
Had nothing to do with the internet. They just put .com behind their name, and it came public at 3 times what it would have without the .com.
Yeah. I think currently it is the wild, wild west of that. We don't know exactly which ones are just put .com replaced with AI, and which ones are really going to be the next ilk, right? Because the .com bubble supplied some of the greatest investment opportunities of all time.
Yeah.
In our backyard, right?
Yeah.
And
the same with
this will be the same.
This right, and you combine that with the same with the cryptocurrencies, all the stuff going on with that. Someone I know, a guy that I coach with, he works with one of these crypto banks, and he's talking about these things called runes. And I'm like, I don't know, maybe Mark knows. Do you know what a rune is?
No.
What?
A rune with crypto. I said, what's a rune? A rune.
Rune.
Yeah, RUNES.
Oh, yeah.
Yeah. So I said, what's it mean? He said, well, he created a rune. I said, well, what's backing the rune? He said, nothing. He said, if nobody wants to buy, I'm trying to get my company to invest in my rune, and then it's tied to some Bitcoin, it'll take off, and if nobody invests in it, it's worth nothing. Useless.
Yeah.
I'm like, and then, they're backing Bitcoin with bonds. I don't exactly know how they're doing that, but it's basically trying to make coins and bonds and some guarantees where you can't lose money. And I'm like,
that's the stable value thing.
You can still lose money, but it's supposed to not. Yeah, but I mean, you got to be careful of those projects, right? Everyone knows who the Haktua was. They created their own coin, and it went from like 40 million to $500 million 5 minutes when it released, and the founders dumped it.
Yeah.
right back down in like 15 minutes.
Yeah, that's this woman was in my office this morning. She's telling me she's going to trade. She didn't want to open an account with us. She's going to trade and do all these things. She's telling me about the company she's going to work with, and it's just what you're saying. Oh, they're creating this crypto with AI and back it with bonds, and you can't lose any money. And I'm like, anytime someone tells me you can't lose any money, I'm like, I'd be a little leery.
It's challenging.
So I think that you can do that.
What?
If you can back crypto with bonds and not lose any money, if it's structured right. I can remember structuring some accounts early on for people to have some stock market participation, and yet it could be guaranteed by the full faith and credit of the U.S. government by buying zero coupon bonds 15 or 20 years out, paying 45 cents for the bond, putting 55% of the money into stocks. And if you held the maturity, you got your principal back, and then you got whatever the stocks were.
Yeah, right.
So, I mean,
I'm not saying it's wrong. I'm just saying that they're coming up with all these exotic strategies.
yeah.
You know,
Creation of financial products. It's
Yeah.
it's a good way
Yeah.
to run in this industry. But I think you said something though, Al, about where the profitability or how do they make money?
on the AI, how do they monetize?
Yeah, and I think one of the monetization principles to take that is a lot like things like depreciation or the non-cash expenses. In how it will flow back in. And I think that's one of the biggest benefits that AI could bring or is bringing is the lower input cost of labor, lower input cost of work,
Could be,
time
yeah.
to create a new product.
Yeah.
So there's a lot of, and those aren't going to be something like you don't realize the cash value of that.
Right.
And I think that's the stage we're in with AI, utilizing it as more of a tool, which will have, again, a double-edged sword, I think. One, it could create some incredible products, incredible advancements in medicine, in genomics,
Don't disagree with that.
energy, right? And in all the archaic industries we use. But it could also be used as a tool to suppress or, to deceive people with these other type of scams, right? And we're seeing both sides right now. It's a real push-pull.
Yeah, I mean, they use it in the oil business. There's a big article I read that they're using AI in the oil business to actually use it to find out where the
Oil reserves are.
Where the reserves are. Yeah.
No, it's a technology for sure. That's it came in 2024. It's going to be a huge technology.
Yeah.
But understanding where it's going to work,
And where the companies that are going to benefit from it, that are
which
really
are the
going to
companies?
monetize it and benefit.
history doesn't repeat, but that it rhymes. And I can remember the dot-com time of having companies like Exodus Communications, which First Union, which became Wachovia, which became Wells Fargo, came out and called an A-plus company because of the market cap. It had no sales, no income. It had an idea, and it had a lot of expenses. And to raise money for the expenses, it was selling capital stock. And when the dot-com thing came to zero in March of 2000, by the end of 2000, Exodus Communications was bankrupt.
Yeah.
I can remember companies that produced a business plan that was 2 pages long and got millions and millions of dollars of financing in a 2-page business plan, just a concept. That's the kind of thing with AI, and they become story time type of stock where they can tell a great story.
And I think that's where it comes back to one of my earlier points about companies not going public. I think some companies doing it really intelligently by maturing these companies before they want to take it public. And of course, it makes it difficult for us as public investors to profit off of those. But that's what they're looking to do, is incubate these companies before they take them public. And we went through a whole phase like that in was it 2023? I can't remember what year it was, when the SPACs would come. Everyone was coming out with SPAC, and you didn't even know what it was. You didn't even know what the company was. And these companies would be spun off from the SPAC and just tank. And I think that they're realizing, we can still make as much money as we want and still have great example, SpaceX, right? It's worth like $250 billion today. Mm-hmm. Not a public company, but the value of the company keeps growing and growing and growing.
And not making money.
What's that?
And it's not making money.
Is it profit? Is it, if it's profitable?
I think it's losing money, right?
I don't know, but I mean, he keeps getting the government contracts.
It's a private company.
We don't know.
So we don't know,
Yeah.
but probably losing a little. I mean, reusable rockets is probably pretty profitable, though, right? It should be, 'cause up and down.
I don't know.
I don't know if it's profitable.
But I think those are the companies that will benefit the most from AI as we start exploring more of the galaxy. Again, those types of benefits are not financially significant today. It's tough to kind of really even picture, encapsulate that. But if it does help us harvest a quadrillion, mineral asset asteroid safely, then you start to realize it. But we'll see.
Yeah. Well, the one thing it's done is it's allowed a lot of satellites to be launched.
That's right.
And that's, considering that the Inflation Reduction Act had a ton of money set aside to deliver internet to rural communities.
Which is failed on, by the way.
Unfortunate.
No, even several articles I read in The Economist said it hasn't done anything for rural access to the internet.
I thought it was like
Terrible.
5 people.
It's
Yeah.
okay. You want to get specific? 5, 4, 4.5.
Which 5?
Yeah, which 5? No, I'm saying I'm not just being critical of the legislation. I'm just saying that it hasn't lived up to its of doing that, which is too bad because that connectivity is important for for rural people.
Absolutely.
And that's all doing hardwire. If you can do satellite communications,
it's a much better way to go.
you don't have any infrastructure.
You don't have to bring
build.
in the fiber optic cables and all this garbage, I mean,
Yeah.
I keep getting pitched for, you see the big things for Lumen. They get, Lumen Field in Seattle, they can connect you with the fiber optic. I call them and say, well, I live right in the city. Oh, well, you don't have fiber optic in your neighborhood. I'm like, really? Your stadium's like 3 miles from my house. I don't have fiber optic. Doesn't make any sense. Put up a satellite and call it good.
Yeah. Anyway, we'll be right back after the commercial break. Don't go away. More lessons from 2024.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike, Al, and Mark.
All right, we're back. Mark,
Hey.
what's another lesson from 2024?
Yeah, I think 2024 gave a lot of affirmation to the strategy that we use, right, where we're being a little bit more concentrated than hyper diverse portfolios, and it showed that while not everything went up crazy, the market's had a great year, around 30%, I think, year to date currently. But if you had a 5 to 7 core holding portfolio and maybe 2 or 3 of them gave you those outsized returns, the whole portfolio was lifted up by. It's nice to see that in a good year, right?
In our case, it was over 50%. It was really fun to see, having gone through the downtime.
Absolutely.
And I can say one thing. We lost 3 accounts. And it raised questions for me because I think most people know the way to make money in the stock market is to buy low, sell high.
Mm-hmm.
Do you agree with that?
I think someone said that. I think
Listeners, do you agree with
I
that?
think it was in the 10 Commandments, right? Buy low, sell high.
sell high?
Yeah.
Anyway, in 3 accounts that we lost, the clients were talked into the fact that they should sell their stocks and do annuities and do other crazy crap like that.
Yeah.
I mean, if most individuals who are not professionals understand the idea buy low, sell high, shouldn't financial advisors understand buy low, sell high? Why would you think they want to sell low unless it is in their best interest to create additional income for them? And then it raises the fiduciary question, I think. Are they making the best decision in the interest of the clients?
No, you and I have seen that, Mike, right? To Mark's point, he's exactly right. I mean, the one client we took over, remember his account had so many crazy exotic investments, and he was being charged. We don't even know what he was being charged, but the investments were just ridiculous. That account to date, he only came on the beginning of the year, was up 70%.
Yep.
70. He was up for the last 4 years. His account was nothing, zero gain. He was losing money in the account when you calculated the expenses of the funds and the exotic
All the
funds
hidden
they put in.
expenses and fees and trading cost internally.
Yeah. And it was like, what the heck are they doing? The account just did nothing, and it was. I mean, he's got to be tickled pink that his account is doing so well.
Yeah.
It goes to, like I said, I think last week, the 5 lessons, right? Time horizon is more important than risk tolerance. When markets are good, risk tolerance seems to, call it, fade from where maybe their normacy is, right? And then that reversion to the mean, if it occurs over a short period of time, it's a very challenging discussion topic to have with a client or an investor.
Right.
Are you in it for the long haul? It may take 3-4 years till you have that one company come back. But then we see things like in 2024 where some of those companies tripled, quadrupled.
Yeah, and people get euphoric,
5x, right?
The woman this morning was like that. She was like, "Oh, this company's went up, and I'm going to trade and do this." And these people I work with, they trade, and they're making 30% a day. And I'm like, I just had to explain to her the tax implications of it. And she's like, "Oh, I didn't even know the tax implications that it's income, not long-term capital gains." And she thinks, I'm like, "Good luck to you. That's a tough game to play.
Yeah.
That's a tough game to play."
But financial advisors feed into that as well.
Yeah.
They're looking for it.
Yeah.
As I talk about it, it reminds me of a Wall Street Journal cartoon, and I have to share it. In 1987, there was a cartoon that came out, and I wish I would have cut it out and saved it, but it shows a couple sitting down across the desk from a financial advisor, stockbroker in those days, and he's saying to them, "Well, you lost $50,000? But I made $50,000 in commissions, so I guess we broke even."
Oh, man.
I mean, whose best interest is that?
Yeah.
Al, you talked to somebody whose financial advisor was doing a plan for the people that were going to give 5%, right?
Yeah. He told him, well, what I can give you, he's one of our clients now. He said, well, I can give you is 5% a year. That's what he said.
Yeah.
I said, well, they wanted to take 5% out of their account. I said, well, with inflation, you're going to crush your account if you go to, but do what you have to do. Now his account's up. I don't know what it's up, probably 40, 50%, but he's been taking out a ton of money out of the account, but it's still up above what he put in.
Yeah. Is that the one for the house?
What's that? No.
No.
Different. His, I just talked to him this morning. He said, yeah, your account's way back up.
It's back to where it started.
More than where it's.
Yeah. $1.5 million in and $500,000 out.
Yeah.
And back to $1 million.
Yep.
And $3.
I said, yep.
Yeah.
I mean,
and that's why we do this. That's why we do this, right? The stories where we're outliers in our industry of what we believe is a good investment opportunity or what a strategy.
Well,
not that the others are wrong.
Yeah.
We just have a different take, right?
Well, one client that I have, she's been with us a couple of years. She had a liquidity issue when we were real estate. She took $80,000 out of her account. That account now still stands at $125,000 over what she put in it. That's pretty damn good. I said, I called you last week. I said, hey, if you need more money, don't sweat over it. Why? Because you got plenty of money. You're fine. She's like, oh, thank God. I'm like, yeah.
And that's the hand-holding of this type of a strategy, too. When you win after you've profited, you must reward yourself because of clients I've had when they reward themselves when we go through those tougher times, those challenging,
2022 was tough.
Which is always a buying opportunity.
Mm-hmm.
Yeah.
It's always a buying opportunity, but it's a challenging time.
It is.
And if they haven't paid themselves, rewarded themselves with a car upgrade, a rental property, a piece of art, whatever it may be, whatever your fancy is, it's a lot tougher to stomach the challenging period.
But they're short-lived today, Mike. You and I did a whole show on that, right? The average downturn used to last 22 months.
Yep.
They last an average of 11 months today. Whether it's AI, whether it's computerized generate, I don't know. I don't think anybody can really specify why. More efficiencies could be one of the reasons, but they don't last that long. So when we hit a downturn, 2022 didn't last long.
No, a couple months.
if you look at 2022
It
and
dragged.
2023, for someone that invested at the very top in 2022,
Yeah.
they're now just ahead 5 or 10%.
No, right. But I'm saying
At
that
the very top,
right.
they've
right.
recovered, and they're just up 5 or 10% from where the top was.
Right.
And if they dollar cost average, they're way.
But I'm saying by the time it bottomed out in October like 12th to 13th of 2022, it bottomed out.
Yes.
From that point forward and it started to turn, it wasn't that long that year. It didn't last a long time when the bubble ended in 2021 and it came down, COVID and all that stuff. And then it came back pretty dang quick.
Yeah. It actually,
That's what I'm saying. I'm saying, those people who invested at the top, yes, they're still feeling it a little bit, no question.
and it was an unusual time because in 2022, we reached a bottom in October, and the market started to climb and was getting our accounts were getting close to recovery. And then October 7th, 2023, the invasion of the Israeli Hamas started.
Yeah.
And the bottom hit even lower than it was in October of 2022.
Mm-hmm. But it was quick, though. It bounced really fast, though.
Yeah.
Mm-hmm.
I mean, the bounce was like, oh, that was a whipsaw, you know.
The worst days are usually followed by the best days.
Yeah, exactly.
That's the tough part.
Exactly.
It's tough to time a bottom.
That's why, like,
Or
this
top.
this lady trading, I'm like, you know, she looks like she's behind on, she's making good money, she's behind on her retirement and wants to sock as much away as possible. I'm like, you know, good luck, but that's not a strategy that most people will utilize it unless they really know what they're doing to make hay.
And while it may be 11 months now instead of 22, I still prefer to tell people 22 or 30.
You're sandbagging them, huh?
No, because
Yeah, you are. You're sandbagging.
it's preparing them for the fact that it could carry on longer.
You don't know, right? You don't know.
You never know?
You don't know. Correct.
If you
I agree.
recover in 11, it's wonderful.
Well, you're going back to 19, was it 73? When it's 73, 74, 75 were just really bad years.
Oh,
And then 81, 80, 82, 83.
August of 82, it
Yeah.
broke.
Yeah.
No, from 66 to 82,
Yeah.
16 years.
I know. A
But
breaking
the
even.
market never got above 1,000.
Yeah.
Got to 1,000, went down 20%. Got back to 1,000, went down 30%. Got back to 1,000, went down 40%. Got back to 1,000, went down 20%. Got back to 1,000 in August of 82 and went to 10,000.
Yeah.
But for 16 years.
But that's when we were more, I wouldn't say that we're not still oil dependent. We are, but oil shock just caused a lot of, energy shocks caused a lot of problems back then. We don't see that as much anymore.
But this time it could be wage shock.
Yeah.
It could really be wage shock.
You're
Yeah.
referring to the deterioration of the job market replaced by kind of automation, robots, AI, you think? Is that what you're getting at?
I think we need to do that, but I think we had, at the beginning of 2022, 4 million more jobs than we had workers.
Mm-hmm.
And there's a program where when a country goes through an earthquake or a civil war or something like that, we allow people to immigrate into the U.S., legally immigrate. 870,000 came in the last couple of years. They're talking about sending them home. So 870,000 took some of those 4 million jobs. We're probably down to less than 2 million. If we turn around and send a lot of those people home, are we going to create that situation again where we have 4 million jobs that aren't filled?
Could be. I mean,
Look at what wages have been doing. And think about the people that were applying and jumping from job to job to job to job to job.
Mm-hmm.
Are we going to be back in that situation? Probably not.
I think that was an outlier time period due to the extremes that happened during the pandemic, right? And recovery. Maybe not.
But we better be prepared. We better be prepared. We're coming to another commercial break. Don't go away. We still have a little more to go through. We're not getting through all of our lessons.
too busy babbling.
We babble. We talk. All right. Don't go away. We'll be right back after this commercial break.
About Money with the AFC team, Mike, Al, and Mark on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
All right, guys, we rambled on about AI, about concentrated portfolios. Now we want to talk about what everybody wants to talk about, the election.
All right. Take us there.
Pardon me?
We had a presidential election. We had a sweep by the Republicans in the president, the House, and the Senate. Now we got Trump back in office, picking cabinet members. We have business leaders that weren't really for him 8 years ago now saying, like Jeff Bezos came out saying he's more optimistic about Trump than he was 8 years ago.
So the question is he really personally that more enthusiastic?
Yeah, I saw him.
Or is he
no?
Is he
said
more
he was more
fearful that the Washington Post is going to be shut down?
No, I think he's. No, I think he seemed genuinely more optimistic about his deregulation plan and getting rid of useless regulation.
For that, it's really positive. I mean, the number of regulations that are on the books is overwhelming.
Yeah, I mean, just look at the tax. We talked about, Mike, you and I talked about the tax code before. I mean, they're ridiculous. I mean, there's tax codes on there for one company. There's a tax code in 1932 for one company that makes automobiles.
Yeah.
That doesn't make any sense. But that's the way the tax code is written. Who can, go get their lobbyists to get certain breaks, and which makes no sense. All these type of useless regulations in there, they need to simplify things.
I agree with that. I think there's
agree.
going to be some real positive things come out.
Yeah. So that part of it, I think almost everybody is positive on that type of take on looking at government spending and government procedures.
And I think there's one thing that's important to think about in terms of the election. There's a lot of people that are really depressed about what happened.
I know.
But for the financial side of things, it's about profits, not about politics.
Yes.
And yeah, there's going to be things that are changed. Things always are changed with administrations. But in large part, it doesn't affect the overall profitability.
No.
Companies move forward regardless of who is president, regardless of who's elected to Senate.
Yeah, I mean, his big thing was drill, baby, drill, drilling for oil, right? I mean, Biden produced more oil than any other president out there, more oil and natural gas.
Yeah.
Now, that being said, if you're going to drill, baby, drill, that's fine. But the oil companies don't necessarily going to like that because it's going to drive their profits down if the supply is just too high. You can crush the supply of Saudi Arabia. They produce more oil and they could find more oil tomorrow like nothing. And it's way cheaper for them to find it now and drill it and get it out of the ground.
Absolutely.
Way cheaper. That was the problem with what we had with Saudi Arabia years ago. Is their infrastructure was so cheap for them we couldn't compete. Now, no problem. We can blow them out of the water with it.
Still, Saudi Arabia's got a really low cost.
They have a very different social labor structure than we do.
Yeah.
And, they're threatening to up their production a whole lot because Russia's cheating so much on how much oil there's to ship.
Yeah.
No, drill, baby, drill. The whole thing with the Biden administration is they needed the oil to get the gas prices down.
Yeah. Mm-hmm.
They realized that. I think they realized that, right?
Yeah. Again, it was aiding a certain industry, but still, it's not completely destroying industries. It's not destroying the economy.
No, and as far as it's not being industry specific, but will he be able to make peace in Israel, in Palestine? Will he be able to stop, like he says, the Ukraine-Russia war? That remains to be seen. He's saying he can do those things.
And hopefully he will.
Hopefully he will, yeah. Hopefully we can come up with some solution.
But will that really affect the economy?
In a positive way, right? So you're going to have to rebuild Ukraine. It's going to be just in shambles now. Kiev and those cities got to be decimated. Someone's going to have to go in and rebuild them. I think the question is will Ukraine become part of NATO? I don't think Putin's really going to be happy if they do that. But I think that's one of the things he was trying to suppress.
It's true.
But that's a political question.
I know it is, but it affects markets, Mike. I mean, those are huge things that affect the European market. So it can have an effect on market.
So let's say the war ends tomorrow. Do markets respond favorably up or down with it?
Well, you want to buy in the sound of cannons, right? So, dang it. I don't know. I don't have an answer.
I think it's positive.
I think it is. I think long term. I think long term is whether the markets go up or down tomorrow. I don't know.
Who knows?
I think if the other one ends, though, Mark, to your question, I think if Israel and Hamas and they came up with a solution, I think markets would definitely see that as positive.
Yeah.
No question. That would be a positive.
Yeah. Uncertainty in that territory is never a positive, right? We're always
what they're going to do with Iran, So
they will have an impact on China as well.
Yeah.
Because Rubio and the trade people are really China hawks.
Well, they've been trying a lot of those appointments too. Like a lot of the more hawkish against China are being appointed, and there's a lot of speak going on about how they want to handle it or how they want to squeeze China. And I think it'll be a very interesting response of how they follow up with those tariffs to attack China, tariffs or policies to hurt, handcuff, limit China, because they are still a big part of our supply chain.
I thought one thing that was really funny is that the steel companies want tariffs. Really want tariffs.
They can't compete.
Well,
I went this, I got my MBA at a Carnegie Mellon, and one of the most beautiful sights that I've ever seen was on Mount Washington, sitting up above the city, looking at the three rivers.
Yeah, beautiful.
Allegheny, Monongahela flowing and creating the Ohio River.
Mm-hmm.
Sitting up there, you had J&L Steel with the blast furnaces blowing flames 100 or 200 feet into the air. It was magnificent to see. Mm. The snow was kind of gray, but
it's a much clearer
all of
view
that
now.
All of that's gone.
Much clearer view.
But at that time, we dominated the world steel market. We had 50% of the world steel market.
We did.
And as Europe rebuilt, as Japan rebuilt, they built new technology. And U.S. Steel and Allegheny Steel and Bethlehem Steel and all those companies that were part of the Dow, couldn't compete. So they wanted tariffs.
That's why Nippon Steel makes sense. They got the new technology over there doing it right, and it's going to save the company. Even the company's like, no, it's going to save us, not hurt us.
Yeah.
It makes sense that they sell. All the company's going to go under.
Yeah. But the U.S. companies want tariffs to protect a way of inefficiency.
No. And I think he's using that, as I said before, that the tariffs is a wedge. He doesn't really want to put 30%, 200% tariffs on. He wants better deals that are more favorable and more equal than what we've had in the past.
He wants to negotiate, play a game of chicken.
Yeah, exactly.
Yeah, we'll see.
We'll see.
I'm not convinced. I'm not convinced that he won't do tariffs.
I'm saying he will. I'm not saying he won't. I'm just saying that he doesn't want to. He'd rather say, hey, let's negotiate a better deal than me slapping 100% tariffs on your widgets.
It certainly worked for China and Mexico.
Well,
I mean, Trudeau was right there in Mar-a-Lago.
Yeah.
And the head of Mexico wrote the letter and said, we'll try to stop people coming across the border. Of course, we get all of our guns from the gangs that come from the U.S. Anyway, that brings us to an end for the program for today. It's fun to talk about all these things and lessons we learned in 2024. We'll begin to focus on 2025 in the next few programs. Don't go away. Stay and listen, because if it's Saturday, we will be talking about money.
You've been listening to About Money with registered investment advisors Mike Adams and Al Souza. If you'd like more information about what you've heard today, or about AFC's investment philosophy and strategy, or if you'd like the AFC team to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1300, The Answer. The preceding program was sponsored by Adams Financial Concepts.